Hey, everybody. Welcome to another weekly update talking about the stock market. I'm your host, Mark Yegge, and I'm glad you're here. It's been a weird couple of weeks, and I think it's all anticipation of what's going on at the Fed coming up next week. That's a big deal. Like, are they going to raise a quarter of a point, which I think they will do on one hand. On the other hand, they're going to go print more money, which is saving the banks, bailing them all out. That's all printing money. I don't care that they're raising rates over here a little tiny bit, because they're making rates cheaper, and you could see that in the charts of the markets, right? Especially the fixed income markets. You're seeing rates actually coming down in the fixed income markets. You're seeing the real estate markets rally, which I find really interesting. If rates are going up, why would real estate markets be going higher, right? Usually people can't afford things because the financing is too expensive. The price of real estate goes down. But some of the real estate charts that I'm seeing, real estate is going up. The markets are yellow right now. Let me show you what I got going on over here. Let's see. Hopefully you can see this. But basically, this is from my mastermind group that we just talked about. Had a great call today. And we're talking about the market being yellow. You can see 2 red lights, 2 green lights on the screen. And that means use a little bit of caution. But the markets have kind of rebounded from those earlier this week, where we had 2 big days of swoon down, and a lot of companies are missing numbers. First Republic Bank is going belly up. You know, those all those other newsy kind of things that are affecting the market. But we are yellow, so that just means urge caution. It could be going red soon, next week maybe with the Fed. It could be going green again. Who knows? Otherwise, it's like that yellow light. Either push really hard on the accelerator or you hit the brakes. All right. Taking a look at the NASDAQ, you can see the NASDAQ had a beautiful textbook bounce off the 50-day moving average 4 days ago on Tuesday, where it touched it almost exactly. Like, if you don't think these markets are manipulated, you are not paying attention. Look at this thing go exactly to the 50-day moving average and bounce off it over the last 3 days. Now, it's doing it on fairly light volume. The NASDAQ is better than the other ones as far as volume goes, but that's not a great sign. Although bouncing off the 50 is a great sign. Take a look at the S&P 500. Didn't quite make it down to the 50-day moving average, but look at the volume at the bottom. Really lousy, tepid volume. If you don't have a lot of volume holding up a stock's movement or a market's movement, that means that another opposing force could easily drive it down, because there's not enough people and money holding it up, right? Imagine a guy running to the top of a hill with a flag, and some big guy just smashing him on the top of the head, and he rolls down to the bottom of the hill. But imagine 50 people running to the top of the hill with a flag, and that same guy comes out. He can't bang at 50 other people on the top of the head. That's what volume does in the markets. So we're not getting a lot of people running up the hill right now. And the Dow Jones Industrial Average, same thing. Look at the low volume over the last several weeks. There's not a lot of conviction this market is moving up. Not a lot that it's moving down either. So that's the saving grace. The New York Stock Exchange Composite went way below its 50-day moving average a couple of days ago and rebounded today. Again, on low volume. But this is the biggest chart. There's one more that I want to show you, but the CBOE volatility index, this is an inverse indicator of the market. So when it goes down, that means the market wants to go up. We haven't seen a 16 handle on the VIX in months, at least as long as this chart goes. It's right been 17 and 18 and 19, but it hasn't been down to 16, which is where it is. That's telling us that people are not scared about the market. Volatility is a fear indicator. There's not a lot of fear in the market. So everybody's kind of on the sidelines waiting to see what the Fed's going to do. My suspicion is the markets are saying that the Fed is irrelevant and that they're going to have to print money, because now the deficit has become such a big number, and we have this debt ceiling negotiation stupid thing that goes on every couple of years going on too. So people are on the sidelines. Who knows what that means? This is an interesting chart to me. The S&P 600, which is a small cap index, it basically went into a death cross today. It's that red line going down through the 50, the 200 being crossed by the 50 on the downside. That's telling us that the smaller businesses, the ones that make up the majority of the economy, are not doing well. And that's all happening behind the scenes. The big indexes are doing fine. Apple's moving up and Microsoft's moving up, and a lot of these companies are moving up, but the general economy is not doing that well. So I thought that was an interesting chart for you to see. One more chart that I'll show you, and that is the building and residential construction chart. Look at this chart. You would never know that there's been a rate increase going on because of the builders. The builders are continuing to build. They're not worried about prices coming down. They're not worried about high rates. They're not worried. Look at that chart, lower left to upper right. That's a textbook chart. Relative strength rating, 99. Like you can't get any higher. You know, these companies, Pulte and MI Homes, Taylor Morrison, Meritage, TriPoint Homes, they're killing it. Beazer Homes might be having a little trouble. They're 12% off the high, but they're killing it. So what that's saying to us is that beneath the covers, we've got some economy that people are worried about, right? But we also have assets that are bubbling up again. Gold, residential construction, gold miners, things like that that are going to benefit when the Fed raises, well, prints more money, not raises rates, but prints more money. All right, so be careful out there. I hope you have a fantastic weekend. Thanks for joining me here. If you like what we're doing here, give me a like or subscribe or whatever it is that's positive at the bottom of this thing. If there's something you'd rather see, tell me that too. Why don't you just don't just say you don't like me. Tell me why you don't like me so I can improve. But if there's something you want me to cover in the future, if it makes sense, if a lot of you are commenting the same way, I'll do that. This right now is the way I do it. And I'm trying to give you like an overall view of what happens in the market. Have a great weekend, everybody. See you next time. Take care.